Surely I can't be the only one that gets caught out with the title, 2 stock market bargains to buy in the FTSE 100. I swear this channel would explode if I started doing all the clickbaity titles that you could do on all these companies. Welcome, thank you for joining me. I'm going to start in this article because it's what kind of inspired this video and for me to look into house builders. Now, house builders in the UK have done Persimmon, and they're big dividend payers. They are massive. They are on par with the mining firms sometimes in the payout yield that their dividend yields. So there's 2 market bargains. Now, one of the bargains we're not going to be talking about, but I felt it was appropriate. So house builder Taylor Wimpey is a market bargain that I already own. This is the guy doing the article. I too own shares in it, full disclosure. And despite the rising dangers from interest rate hikes, I'm tempted to buy some more. Now, let's see here what they go on to say. Heavy share price falls means it trades on a PE ratio of 4.6. Dividend yield has jumped to 10.1 due to the stock price actually dropping. That's what happens. See, it's dividend per share that I always look at in most companies, because dividend yield can go up and down depending on the value of the share itself. Okay, so collapsing pound, fears of high inflation, and interest rate hikes means that a lot of mortgages were actually being cancelled. And so will this lead to a slowdown or an almost halt to new home building? Yes and no, maybe. It's the answer is more in the grey area, because at the end of the day, home building will continue as I want to say as long as the house prices are at the level they are. But through recession, through anything, sometimes it's good to just keep on building, and everyone needs new houses. Even if this, recession, which apparently we're not in, but I was told we were in, and yeah, it's hard to follow sometimes. I do have quite a positive out. If you're an optimistic person, although I don't invest with any feelings, optimistically, we'll get out of this and things will return to a bit normal and hopefully better than normal in the future. So what companies would you be planning on picking up in that time? Well, house builders. I mean, makes sense, right? Let's see what happened in 08. 08's the good one. Well, 07, 08, where they crashed. They were trading at £4.14 and then down to 11 pence. Does it mean 11 pence is probably their lowest ceiling? Well, if you pick them up at 11 pence there in 2015, 7 years later, they were then valued at £2. At the moment, they sit at 89 pence, 88 pence when I picked them up. Well, he goes on to say in his opinion that the slump of 7.5-year lows this week, below 90%, reflects a bit of a threat because of all those other problems. Besides, as a long-term investor, I still find the company's profits outlook beyond 2022 and 2023 attractive. There we go. So they go on to talk about JD. But we're not going to talk about JD. We're going to go on and start this video the way it normally goes. So this screen, really easy. Google just Taylor Wimpey stock. This will bring you right to it. I always like to point that out just in case anyone wants to, have a wee bit of a nosy. The market is still trading. What time are we at? We're at quarter 2. So the market's still going. We've got, I can't see the time in the computer because it's full screen, just in case anyone was wondering. I could have also scrolled over and seen the time here. Anyway, we all learn something new, don't we? Dividend yield 10.25, which is extremely impressive, really high end. Now, high dividend yields I'm always really dubious on, because it's like, how sustainable is that? Usually the answer is not very, but at a 51% cash payout rate, it's not the worst. It's a pretty healthy compared to quite a lot. 5,358 employees, founded in 1880. We'll be going over to their website next. Dividend data, Simply Wall Street, all the usual suspects. But when seeing the last year, down 43%, almost of a high of £1.75, but now they are trading at 88 pence. I know quite a few of our viewers overseas in the United States are reckoning this is perhaps a really good pickup due to the exchange rate from dollar to pound. So getting into the UK market's probably a bit easier for some of you. And I welcome it if that's a good strategy, then up to yourself. I, of course, do not give financial advice. I just simply give overviews of my own thoughts on what I'm doing and what I think. Out loud. Okay, over to their main website. We'll have to find out who are Taylor Wimpey. Now, the thing about them is they do new builds, so they're home builders. So obviously large estates, they probably take over new builds, contract out work to build them. How much of the building they do themselves, I'm not 100% sure. I'm 99% sure that a good bit of it is contracted. You know, I'm sure those 5,000 employees, quite a lot are just organising the whole thing behind the scenes. They go on here to, get packing. With stamp duty cuts, moving could be easier. So obviously this is all pushing towards, this is their public website. So it's all about buying homes, easy mover, help to buy, home reach, part exchange. Part exchange for a home? I know that's for cars, but anyway, take a look at our buyer guides. Yep, just gives the public everything they need. 2-bedroom homes, 3-bedroom, 4-bedroom, 5-bedroom, 55-bedroom. Nah, well, I don't here wouldn't run it past them. Maybe they built some mansions in the past. Let's see. We are 5-star rated in customer satisfaction. I always like to see that. Just as a wee bit of a tangent in this, if you see a company that is well rated, and I don't mention this enough in videos, and I probably should, is going on and seeing their customer service ratings, if it's possible for that business, is a very important thing, because some companies are horrible customer service, horrible public facing. I know certain companies, it's for a whole multitude of reasons, but I like to see this, and I love when a company brings it to the forefront and says, look, we're over 90% of customers would recommend us. That's nice. Howden's was very similar in that regard too. Okay, back up here. I want to see locations. I can't give you graphs, but I can give you locations. So we'll go to Belfast. I love Joe Rogan pronouncing this. It was brilliant. Belfast, Northern Ireland. What have we got? We got nothing. But we've Belfast Road in London, and that counts, doesn't it? Just to see, I want to see results. What's the price? 402,000 to 675. I suppose it is near enough. Is that the centre of London? Where is this? Is this gonna? I thought that was gonna show me where it was, but it didn't. Okay, back to Belfast Road, please. I want to see the rest. I want to see what sort of buildings you're dealing with in London. Again, all part of the research. Come on. Price range? Any price. There it is. Okay, so that's a 1 to 3 bedroom. Different apartments and plots and Block E and whatnot. Copper Yard at Union Bridge, 502 to 6. Y'all in the city got crazy house prices. Do you know what that would get you over here? That would get you... That would probably get you a 4, 5, 6 bedroom house. I mean, new build, massive. Well, maybe not an absolute new. No. New build. I've seen a few over here in the countryside, and they're around that region. But all it would get you is a 1 bedroom, 1 bathroom for $500,000. Cozy. I mean, some people like city living. I know I have family over in London. That is them. They love there. They wouldn't really change it for the world. And if you live in a city and that's it. Some people live in the countryside. I live sort of halfway between the countryside and the town, so I kind of get it. You know, I couldn't really do with the hustle and bustle, but I'm going completely off topic. Okay, enough of our shopping here. I want to jump on over to Why Choose Us. We know buying home is the biggest decision you'll ever make, so why choose? Let us put our mind at rest. And it goes on to why you should pick them, why buy new, their homes, customer services and all. It goes on about them building a better world, creating places to bring people together. I do like new builds that are like very community focused. There's a few in the town they've built, and it is nice, the wee park in the middle and all. You know, they've thought about it, and wee bit open spaces and whatnot. Instead of just fit as many houses into the square space as you can. Quality assurance and supporting local charities and communities. Okay, lovely. Corporate time, and then we go to Simply Wall Street. You can go over to the corporate section. You can look for the investors bit. Half year results for 2022. Register for the live stream. When will it be released? 3rd of July or 3rd of August. Okay, well, I can't really register for a live stream because it's already happened. But anyway. Will you give me any reports? Is it reports I would be wanting? I think it's presentations. I like presentations. Okay. I want to see the investment case as well. Okay, let's see them here. Our approach to land differentiates Taylor Wimpey. It has enabled us to build an excellent land bank. A land bank. Okay. Which will underpin strong volume and margin growth potentials and shares or returns to shareholders. They're focused on execution, delivering value and outstanding land bank, and our talented teams are responsible to benefit all stakeholders. Okay. Strong momentum. Right. Clear levers to improve operating margin. 20 to 21% margin. That's pretty good. That's wow. And they are highly cash generative. That is very true for all home builders. They're very, very cash generating businesses, which for dividend paying, fantastic. And you can go on to their strategy, their business model, key indicators. There's so much you can go into. But I like skimming over things. So can I open you? Can open you. Okay. Hopefully I can close you just as easy. Half year results for 6 months to July. It's quite nice. I mean, where's the start of this? Okay. I just want to read a wee bit of this. Excellent first half against strong comparators. Operating profit is about 600,000 higher than last year. Yeah. Completions of JVs, which I know what JVs mean. I'm going to guess that's something about, is that buildings? Joint ventures? Joint ventures. I bet you that's what it, means. Opened 50 new outlets in the period and growing outlet numbers to 233. Okay, excellent. Total order book of 10,000 homes. It's joint ventures. I was right. See, sometimes you pick these things up. Expect full year operating profit, and consensus range continues to lead the volume of home builders in the average construction quality review. Okay, and they've won Best Apprentice of the Year. Nice. Okay, I must admit, pretty good. If I do this, what are we going to go to? Can I exit this? Yeah, I want to exit this. Nope, that's not what I want to exit. Did that unpause? It did unpause. Welcome back. That was, I don't know what happened there, but we're on to Simply Wall Street, a website that I use for all the financials of these videos. A lot of you that have watched quite a few are very familiar with it. So if I have any affiliate or links I can give you for free membership or free trial for this or anything in the future, I will certainly have it down in the description. At the moment I don't, but I've paid the full one for myself to show you as much as I can, and there's a free version of this where you can check like 3 out per month, so that's pretty handy. Okay, so 85 pence as we were saying, and it's the lowest it's been in quite some time. Obviously the last week, very, very rough. The snowflake analysis here for value, future, past, health, financial health, and dividend of the company is pretty good. Flawless balance sheet, undervalued, and it pays a dividend. Future, future growth for all house builders at the moment is probably in the dump. We don't know how long a recession or how long all this economic turmoil and the war and everything's going to last. So everything's a wee bit up in the air at the moment. But with that brings opportunity, provided you have the stomach for these kinds of investments in times like these, and obviously the financial ability to do it also helps, I suppose. We can go down here to find the valuation. 85 pence. They are 80% undervalued at £4.38. Now, thing about this, and I want to point it out, it's on a discounted cash flow model. There's a million models to figure out what a stock should cost. I could run a list as long as my arm. Well, it's not really that long an arm, but I could run you a list of everything. Now, one of my favorite ones is Intrinsic Value. That's one that I believe Warren Buffett and a few other big investors are very, big into. I'm not saying just because he uses it, you need to use it. It's just quite a good way of looking at it. So as a discounted cash flow model, do you know what's really good? Comparing both of them. So at 85 pence, discounted cash flow model gives it a fair value of £4.38. Jumping over to Intrinsic Value, which you can find in Alpha Spread, highly recommend you check out this website. Just for a quick reference, obviously as much of the resources that you can use. It's another one you can sign up to and all that, but I just use the free one. It does go a wee bit more in depth, but it says intrinsic value is £1.89. Now this is worked out off a wee bit of a model that goes over revenue, net income, cash. This is actually kind of half showing it here. Pensions, debt, liabilities, and then it goes into like cash, net income, investments, revenue, and free cash flow. And it's all based, a lot of it is based on cash flow and cash on hand, which for me is a much better way of looking at, especially a dividend pair, who cash flow is very important with. Back over to Simply Wall Street. Alpha Spread, I will have it down in the description for you if anyone wants to use it for looking at their own companies, but I will be using it in future episodes. So yes, we've seen the valuation, it's 80% below. That's mad. Future growth is... but it's there. I don't know why it's not scoring great, but it's meant to forecast a fall of 0.5%. I mean, if that's how it's going to do in the next 3 years, considering the entire situation in the economy, isn't that a great thing? Just my thought on it. Past performance is not too bad. Slump into 2020. What did you expect with the pandemic? Let's see, free cash flow, again, slump into the pandemic, but their cash flow was quite good. Even up till recently, you're talking between 500 to 200 million. Down to financial health, assets to liabilities in the short term and long term, boom, blown out of the water. They aren't debt free, but they have virtually no debt, and it's quite impressive. They have more cash than they have debt. So, definitely warmed up Dell house builders as I was looking through this. So we can go down here, dividend. It's notable high growing and earning coverage. Cash flow meh and stable, not so much. 10.44%. Ex-dividend date is in fact this October in 12 days. And I'll be releasing the video today, so I know that's accurate. You can also tell it was recorded on the 30th of September. Before I'm all dressed up because I'm actually going out for steak tonight, so there's a wee bit of a side note. What I'm doing this evening, going to get a 12-ounce fillet. I cannot wait. And for any of you watching, I get it medium rare. That's exactly. I don't know why I thought about it. Used to eat it well done. I know how a lot of people feel about that, but medium rare, I can stomach it. It's amazing when it's done right. Wow, home builders and a dividend video, and I go off about steak. Here at the end of the day, a lot of you love just the uncanny unscriptedness of these videos, so I do appreciate all the comments. By the way, let me know in the comment section below, is Taylor Wimpey part of your portfolio? You're looking at buying in? Let me know what you think of the company and the future prospects of it, because I love the discussion and a lot of you are so insightful and it's brilliant, and you come from all over the world. It's quite fascinating, I must say. Percentage here, free cash flow. It's 155% cash flow payout. Now, I don't think that's 100. I don't know. Sometimes I throw these things up. I know the earnings payout's 57%, and that kind of flies in the face of what I said earlier in the video, because they have massive cash flow. But anyway, we'll see it in Trading 212. It'll give me a good graph on that. Ownership, I love going down to this. 10% by BlackRock and 5% by Vanguard. Usual suspects down in the ownership. So no surprise there. I would be more concerned about a company if I didn't see these two at the top of the ownership. But yeah, carrying on to Dividend Max. Now, one wee thing to point out about Taylor Wimpey here is they actually changed out their payout schedule. I can show you here that they used to pay out back in sort of 2016. It was an interim, a final, and they paid a special. I'm not too sure why that was the case, but you can see they were kind of growing year on year until 2020, where they no longer had a payout. They seem to have changed it up a bit, where they're paying now an interim and a final, and they are gradually growing both, which I like it. I don't know. I prefer seeing a dividend per share growth increase personally. And yeah, you can see from the graph here, 2021, they went through the roof. In 2022, they still have a lot of cash on hand. Now, whether they cut the dividend or they keep it at the level it's at, it's impossible to tell. So, yeah, I have 100 shares, so I'm going to get a payout of £4.62 in November. That's pretty cool to know.
Now, over to Trading 212, the platform that I use for my dividend portfolio and just general brokerageness. There's no fees. I don't really use any of the CFDs. Well, there is like foreign exchange fees and other things. Nothing. There's no such thing as a free lunch. But in terms of actual like fees when you're buying and selling stocks, and I buy in small quantities quite a bit, it's pretty handy. So I have it down in the description. If anyone wants to sign up for it, feel free. It is an affiliate link, but sometimes they run the competitions and sometimes they don't. So you might get a free share, you might not, but you know, it's the link for it anyway if you want to have a look at it. Ticker symbol TW, I think I didn't mention that, so I'm going to throw that out here towards the tail end of the video for everyone still watching. I mean, I'm sure you've figured it out, but it gives you a bit of information on the company, goes on down, CEO, employees, where it's headquartered, and industries. Going on down here, they give a few graphs, pretty useful ones. Obviously 2020's down in the dumps because COVID, and balance sheet, again, growing assets year on year, pretty good, and cash flow. Now, cash flow was alright in 2019, less so in 2020. And how much do they pay out in dividends? 301 million, and they have an operating thing of about 331. So yeah, they do give out quite a bit in cash dividends, but they still came out positive with 98 million, so that's pretty good. Yeah, that's Taylor Wimpey, done and dusted. Let me know what you think, as I said, in the comment section below. And I'll be going on to have a look at through a few of their competitors, plus a wee comparison video between several home builders coming out very soon. So stay tuned for that. And have a fantastic day, morning, evening, wherever you are. And thank you so much for watching. Bye-bye.